Hey, what's up, guys? So I wanted to do a quick video explaining the changes with the VA cash out refinances. We got some big changes coming, and it kind of makes me sick to my stomach because one of the biggest benefits to a VA loan is being able to do 100% cash out refinance, which means, let's say if you buy your house, you bought your house 2 years ago. Here in Middle Tennessee, our average home has increased in value about $100,000 over the last 2 years. So we've had a huge increase in equity. Well, as a veteran, you are eligible and you are entitled to be able to take a cash out up to 100% of the home's appraised value. So let's say you bought the house 2 years ago, it was worth $300,000. Now your house is worth $400,000. If the house appraises at $400,000, we can get you a new loan up to that $400,000. Well, that's all about to change. So Ginnie Mae is the government entity that securitizes VA loans. So GNMA, and what that is, let me kind of break it down. It's really complicated, but what they do is they're the ones that insure the VA loans. So the VA sets out this benefit, and they say, hey, if you're a veteran, you're entitled to these benefits. And then what GNMA does, Ginnie Mae, is they come along and they say, okay, as long as you meet the guidelines that the VA set forth, we're going to pool the money together and be able to sell it to investors. So they securitize it and sell it to investors in the form of mortgage-backed securities. It's all very complicated, but long story short is Ginnie Mae is the one that really sets out the guidelines to purchasing the VA loans when it comes to the banks that are actually loaning the money. So Ginnie Mae came out and said effective November the 1st that they are doing away with 100% VA cash out refinance. Boom. It's kind of a game changer, guys. Now they're maxing it at 90%. There's some talk that they will have a custom pool that they can go over 90% up to 100%. But I don't know any banks that are going to buy those loans. I have not yet heard of any. Somebody may come along in the future, but what we're seeing right now is the VA cash out refis at 100% is going to be a thing in the past until some investor steps out and they make an avenue for Ginnie to be able to sell high loan to value VA cash out refinances to some investor somewhere. So anyway, so here's the problem, guys. Wednesday, right, I quoted a guy 3 1/8 on a VA cash out refinance, and he kind of hem-hawed around, wanted to talk to his wife, wasn't really sure what he wanted to do, and he comes back to me yesterday and he says, hey, I want to move forward with it. So cool, no problem. I get on my computer, I look to lock in the interest rate, and all of a sudden the rates went way up, and I'm like, wait a minute, I quoted him 3 1/8. Now the rates are like 3.5, and oh, by the way, I only have one investor that's gonna do the loan, one bank that's gonna buy it, and then at that I can only do like a 45-day lock on it. So just the day prior, I had a ton of investors that would have bought that loan, which means I can keep the rates down really low. And today I've only got one investor that's going to buy it, and I can only do it up to 45 days. So that gets us up to the November 1st date. So very important facts, guys. If you were thinking about doing a VA cash out refinance and you need that 100%, you may want to call me like today and get that rate locked in. It's going to be a thing in the past, effective November 1st. That means your loan has to close and fund by November 1st in order to go up to 100%. Other than that, you're going to be maxed at 90%. So we'll do an appraisal on your property, and they will loan you up to 90% of whatever your house appraises for. So don't really know how I feel about it. I think it's kind of, part of me feels like it's kind of messed up that they're doing that. But the other part of me, I understand, because most loan products, they cap you at 80% of your home's value to do a cash out refinance. So in one hand, they're kind of protecting the equity that you have in your house, and they're protecting themselves, because what happened was a lot of people would buy a house and then a year down the road, they would turn around and refinance it. Well, the investors that funded the money for you to get your mortgage, if you pay off within the first year, they lose money. So basically your mortgage lender, they really don't make any money until the first year or so, over a year of you having your mortgage, because of the cost of originating the loan. So if you pay it off within the first year, they consider that loan churning, right? And that's a bad term. So all the investors that were buying Ginnie Mae loans or mortgage-backed securities, they were getting pissed basically because the VA loans were paying off too soon, and it was because people were doing too many cash-out refinances too quickly after the buying the house because of the way that the equity has shot up in houses all across the country. So due to VA loans paying off early, the investors of Ginnie Mae said, "Hey, we've got to change this. We cannot be losing money out there." And of course, a few bad experiences ruins it for everybody, and that's the case here. So if you guys have any questions, my contact information's left, right, up, down, wherever it is, all around. Feel free to give me a call. Be glad to help you guys. I specialize in VA loans. I've been doing this for 12 years. I know the guidelines inside and out, and I know how to get you taken care of. So I'm here to help. Thank you, guys.